Good morning, Latip.
Good morning.
I have the pleasure of introducing to you a very special guy. I like this person because he's a free spirit, he's funny, he's creative, and he's off the wall. His first job was a paper route at age 11. He began his entrepreneurial endeavors at a young age. He's been into sales for over 30 years. He's been an independent insurance agent for the last 10 years. Well, actually, in the insurance industry for the last 10 years. Started out with farmers, and as the last 2 years, he's been an independent. He is married to his lovely wife for over 20 years. He has 3 children, 2 boys, 1 girl, ages 14, 12, and 10. They're heavily involved in soccer and Boy Scouts. He lists as his hobbies refereeing soccer, camping, rock climbing, the outdoors, and he's kind of a one-man band, an aspiring musician. He plays guitar, a little bit of bass, and some percussion. His recent goal is to climb Mount Whitney, which hopefully will happen sometime this summer. If you haven't figured out who our special speaker today is, he goes by the initials EE. So let's give a warm welcome to the one and only Eric Evans.
All right. Good morning, everybody. All right. So, just like Guy Ballard, I'm going to kind of talk about the macro versus the micro approach to something that should be really important to you, especially when it comes to your number one investment in your life, whether it's diamonds or a house. And what I'm going to talk about today applies whether you rent or own, okay? Because most of the topics you'll see on the piece of paper in front of you apply whether you rent or own, all right? So if you're renting, this doesn't apply to me, it does, and you will see. So I'm going to go through it because I got a lot of things here. Oh, just like Guy Ballard, I got in my... No, I'm kidding. All right. I can't show that. I can't show that. All right. So we're going to talk about what's the difference between the top 4 homeowners riders in the state of California, AAA Allstate State Farm Farmers, versus what you can get. So we're going to go through these topics. ID theft. ID theft is like the #1 crime in America, growing and growing and growing. In fact, 8 million victims per year at about, and those of you paying attention and have a little pen, when it's fill in the blank, this is fill in the blank, just kind of participatory, to the tune of $50 billion a year. It's a $50 billion a year crime right now. So, ID theft. If you have one of these companies up top, with the exception of Farmers, you have 0 coverage on your policy. 0. AAA doesn't offer it, Allstate doesn't offer it, State Farm doesn't offer it, Farmers does. And then every one of my carriers that I represent, except 2, offer some form of ID theft, protection, or recovery. It's more recovery than protection. #2, water and sewer backup coverage. What is this? Well, this is specifically excluded on every policy up top. Specifically excluded. What does it mean? Massive storm and your toilets and showers no longer drain to the main drain in the middle of the street that the city takes care of and maintains regularly, right? Yeah. Especially nowadays with the budgets in the black, and suddenly you have raw sewage backing up into your homes. That's what sewer backup, water backup is. It's excluded by the State Farm policy, excluded by Allstate, excluded by AAA, excluded by Farmers. The only exception is Farmers recently added like a $250 add-on you can add to your policy. Every one of the carriers I represent, except 1, offers this. And this doesn't happen very often, but when it does, it can be very, very expensive because essentially your home is now a hazardous waste area. Sewer water backup coverage. Named peril versus open peril. What on earth is this? Oh, and as you're being handed out candies, the reason you're handing out the mint patties is because you guys are going to be cool with your coverages because you're going to know what you don't have. As terrifying as it is, but see, now you're going to be cool with knowledge, right? Cool with knowledge? Yes, cool enough. Hand out the next batch there. Scott. Come on, Scott. Get it together.
Waiting for your go.
I know.
You want to finish your
Bam.
list? I'll do it.
All right. So number 3, named peril versus open peril coverages. What does this mean? All the big 4 offer what is called named peril policies. Named peril policies. What does that mean? All right, those of you ready to fill in the blank. A named peril policy means that only those coverages named are covered. So, farmers' policies back in the day, they would name pretty much the 4 things that they would cover: fire, wind, theft, water only if a pipe breaks. That's pretty much what everybody covers. Named perils only. What is the other thing? Yeah, there's open perils. Comprehensive means everything is covered unless they specifically say it's not covered. Typically, what is not covered? Earthquake and flood. Pretty much it. So what does that mean? It means that when you have what's called an HO3 or a named peril policy, that means only what's on there is covered. All 4 of the companies up top only offer HO3 named peril policies. Every carrier I represent, if you look at the back of my business card, I represent a lot. I represent more than 10 carriers. All of them except 1 offers a comprehensive peril policy. This is very, very important. Very, very important. Okay. Number 4, personal injury. This is kind of important here in 2012. What is personal injury coverage? Well, those of you who have a renter's policy, condo policy, homeowner's policy, even down to business policies, you have personal liability. Someone trips on your property, your kid runs someone over on the sidewalk on their bicycle, you're playing tennis, you break your partner's nose and they want to sue you. Those are all, those injury, bodily injury type coverages. Personal injury, though, that's not always covered. In fact, there's only one company I'm aware of that actually extends that onto the homeowner's policy or renter's policy. And where personal injury kicks in, that's that non-bodily injury side. It's the, Bruce, you broke my nose playing tennis, but it's crooked, and I'm upset because I'm a model, and now I'm going to sue you for all my future income I'm not going to earn. Hope your policy covers it. Have a nice day. So that's personal injury. But it's also when your 13-year-old thinks it's cute to say that Johnny Jones has cooties and stinks all the time, and then he walks in front of a train because he's depressed. Oh, now we got some problems. Yeah. So, and that's, that kind of thing is happening, and you hear about it, and it's very, very sad these days. But then again, that's where the personal injury kicks in. The family sues you because your kid did something bad, the ringleader, whatever. Personal injury, okay? That's a big deal. Your policy should have that. Like I said at the top, only 1 offers it. It is optional. If you're a farmer's guy, you got to look at the coverages. Right at the top, it says personal injury covered, yes or no. It's real clear. It's real clear. That's an option. Building ordinance. What is that? Well, building ordinance has to do with building codes. Building codes. So city council people are always busy changing codes. How many panes of glass should be in your window, what kind of wood should be in your attic, what kind of wires should go through your walls, whether copper's the pipe of the day, some kind of plastic's the pipe of the day, whatever. They're always changing and updating codes. So if your garage burns down and you have a 1-story home and it takes out your living room, that portion of the house that gets rebuilt has to be updated to 2012 standards. And that includes fire sprinklers. So if you've never priced out fire sprinklers, they're pretty expensive. Very, very expensive. So if your policy has a real measly little 10% added to the dwelling coverage, then you may be coming out of pocket. All those homes that were burned, Rancho Bernardo, San Bernardino area a number of years ago, a lot of them had these little wimpy coverages, wimpy little 10% dwelling coverages. They pulled out of pocket. That was the big lawsuits with all these insurance companies that had underinsured values. Anyway, so I generally, if the home is more than 10 years old, I'll stick 25% on there. If it's more than 20 years old, I'll put 50% on there. Why? Because you deserve it, and you need to have, thank you. You need to make sure that you have adequate rebuilding costs. And you're thinking, oh my gosh, all these coverages, they got to be costing an arm and a leg. No, but those of you I've quoted Those of you who know, who I've written your business, know that actually the opposite is true. There is tremendous savings by shopping your homeowner's insurance and wrapping it with a package. I'm blown away still. And it's been 18 months since I've been doing this with all these different carriers. I'm still blown away at the pricing options I can bring to my clients. It's truly amazing. I'm saving folks anywhere from 10 to 40%, 10% if you're not insured very well, 40% if you're insured perfectly, and bringing all these other coverages to you. So it's sort of like, you know, the drive-through and you get your chicken versus someone serving it to you at the table and wiping off your mouth for you. That's sort of like a full service or self-service. So that's sort of the difference. So let me ask you this, homeowners, renters, condo owners, which of these do you want to be without when you have your next claim? All of them? You want to be without all of them? Yeah. That's a man who wants to spend a lot of money on his next homeowner's claim. That's right. Well, and you don't have to be without these coverages. That's the point. And you don't have to pay more. That's the other point. So, friends, family, clients, yourselves, you know where to go. CIA.pro. It's kind of cute. Did that at 10 o'clock last night. Okay. Any questions?
30 seconds.
30 seconds.
Yeah.
Yes, sir.
Do any of the homeowners' policies cover mold damage these days?
Mold damage is generally, it's specifically excluded. I have policies that do cover mold. It's very limited though because of all the big stuff. Generally about $5,000 to $10,000 in mold. The biggie for condo owners that have an attached wall is your liability for your neighbor if your water claim causes mold in their place. That's the real biggie. If you have no condo coverage and you own a condo, you're kind of messing with danger. Yes, sir.
Dog bite.
Dog bites are included. Yeah. Unless you have an exclusion on your policy. You got to check your policy out. Anything else? I think I'm done. Oh, one more question, Sherry Boone.
Water and sewage backup, would that be covered by flood insurance?
No. Flood insurance, I'll be quick. Flood insurance will cover, there's a difference between milkshake and chocolate milk. They'll cover milkshake consistency mud. They will not cover chocolate milk consistency muddy water. That's from the flood people. And all the chocolates in front of you,